In this video, I'm going to teach you exactly how to swing trade in 2024 and beyond the right way. I've prepared for you a full guide, A to Z, on how to swing trade with my latest 600% trade and the exact strategy that I used. I'm going to show you how I knew to enter right where this arrow is, how I managed this trade, how I defined my risk on this trade, and how you can apply this strategy to any swing trade you may put on, whether that be on SPY or QQQ or in any individual stock name. Now, in this 4-step plan, I'm going to break down the expectations of swing trading and what you need to know starting out. See, a lot of people go into this with the wrong mindset. They go in thinking it's get rich quick, or it's impossible, or that they could never do it, all of which I'm going to squash and tell you exactly how you can go in with the right mindset. 2, contracts versus equity. I'm going to go over which you should buy, how to choose these contracts, premiums, expiration dates, you name it. Step 3, I'm going to go over the psychology of swing trading. Now, as some of you may know, I am a full-time day trader. I have been trading for 8 years, though during those 8 years, I've had my fair share of large swing trades. So I'm going to go over the day trading tips and psychology tips I use on a daily, and how I apply those to my swing trading and overnight trading. And finally, we are going to hit the charts, and I'm going to reveal my full strategy, how I found the risk and defined the risk on that trade, how I look at charts for swing trades and look for levels in larger time frames, and I'm going to break down A to Z how I manage this live in real time inside Team Bull. Now, before we continue, I just want to say that I am back on posting full-time trading and chart content on the weekly. I know thousands of you guys have missed this. We're going back to our roots. We're going to have quality education out every single week. So if you're looking to learn, level up, and become more confident in your trading ability, make sure you tap in, hit that subscribe button, and let me know in the comments what you want to learn next, how I can help you, how my team of traders can help you, and what your goals are with trading and this channel in 2024 and beyond. Now, first things first, expectations. Let's go over a few of the facts and the myths of swing trading and trading in general. A few of the facts. Swing trading gives us the best risk reward. When done properly, when you know how to manage your risk, which you're going to learn today, swing trading can give us some of the best risk reward and the best possible outcomes with the least amount of stress. Fact number 2, swing trading is great for anyone that is busy or has a full-time job. Now, I can almost guarantee that each of us watching this have one of those two things. Life is busy. There's kids, there's activities, there's many daily things that we have to do to simply survive. Or it could be a full-time job. You're working 40, 50, 60 hours a week, and that's time consuming. Lucky for you with swing trading and overnight trading, this is something that can help provide you with supplemental income, something that everyone can use in such an expensive life. Third, this strategy is easily learned. There is no secret strategies here. Everything we teach is simple, it's price action based, it's volume based. I think that everything we teach is 100% learnable by anybody who wants to become a trader or is already a trader. And finally, every trader should know how to swing. Now, whether you apply this to your own strategy, whether you actively start swing trading after this video is up to you. But I think as someone who wants to be a full-time trader or wants supplemental income as a trader should know the basics and know what it takes to make money overnight in the stock market. Now, a few myths. Overnight trading is too risky. Wrong. It's too risky if you don't know how to use the proper position size, which I'm going to teach you today. I need a lot of money to swing trade. You do not need a lot of money to swing trade, and I will show you exactly why not. There is a secret strategy. Nope. Any guru that tries to sell you on a secret strategy or a get-rich-quick scheme with that is just lying to you. There is no secret strategies. I'm going to lay it all on the line today for 100% free. And finally, everyone who swing trades fails. False. They said the same thing about day trading. I then went on to make over $2 million doing it, and I've seen thousands of others become confident in themselves and make money themselves trading. It's hard, yes. Is it easy? No. Does it take years to learn? Most of the time. But is it possible? You're damn right it is, and that is what we are focused on. If it is possible, if there is a system that you can utilize to do it, that is what we are here to teach, and that is what you are going to learn today. So, when it comes to what should you trade, options or equity, there's a few different factors to look at. For options traders, it's important to know you have a larger percent risk when you are trading options swing trading. However, you are also presented a larger percent possible gain. There's Greeks you have to know, specifically theta, which is time decay. That's where picking your option contracts comes in handy, which I will show you in just a moment. You have less upfront capital required. This is great for small accounts. Great for people trading with specifically less than 25,000. And finally, we trade off premium price. We don't trade off stock price, which we will go over in a moment as well. Now with equity, we have less percentage risk, which comes with also potential less percentage gain. We have no Greeks, which is fantastic for the beginner, and we have more capital required. So I use the 25,000 mark because you are not subject to the PDT rule, and more often than not, it's going to take you a larger amount of capital to make money off equity than it would off options. Now, equity is not for everybody. I think that it's a good starter place. I think that for your long-term portfolios, it's fantastic. And I think that if you're looking to learn a system or implement a system, I think starting off with equity is great, even if you're trading 1 share or 2 shares or 3 shares. It's going to teach you to hold through the ups and downs and to implement your system with minimal risk, which is what we want to do. We want to live to trade another day, prioritize system building, and manage our risk to stay alive. So when it comes to choosing our option expiration dates, we have 2 things to look at. If you are trading individual stocks, you'll notice that you will have a weekly expiration every single week. However, when you're trading indices like SPY and QQQ, you have expirations nearly every single day. So when we look at individual stocks, which is what my latest 600% trade was on, though I mainly intraday trade SPY and QQQ and futures, I always look for month-out expirations at a minimum. This is because if I'm looking for a certain move, typically speaking, weekly expirations have a lot of volatility in the option premiums. We don't like that as people who want to trade based on the chart. If you're strictly watching premiums, which we'll go over in a moment down here, you're going to often get shaken out, given a lot of emotion with your trade, and you're not going to handle it strictly based on the principle. You're going to handle it based on profit, which is what we want to avoid. So I'm always looking. So today's date, or the first day that market is open again, is July 12th of 2024. If I were to put on a trade that day, I'd be looking for a minimum of August 2nd to August 9th to place my option order. I want at least a month out. 1 to 2 months is what I'm looking for. Now on the indices, again, it depends on the type of trade, but if I'm looking for a macro trade, a trade that I found in the weekly time frame or sometimes the daily time frame, I'm looking for the same thing. Around 3 weeks to a month out, up to a month and a half to at most 2 months. Anything over that, you're going to get into leaps and you're going to look at longer term option expirations. But for me, I like a month out. It gives me that peace of mind sleeping that if we get news overnight, it's not going to completely crush my premium. And it allows the trade to breathe, which is what I want you guys to work on. I need you guys to allow your trades to breathe. It is critical. Now, as far as selecting option strikes and premium, I always like to look a few spots out of the money. So on this, you can see the purple means in the money, the black is out of the money. We have puts on the right, calls on the left. So for me, if I'm going to be picking a swing for August 9th of 2024, I'm likely going to be looking 3 to 5 spots out of the money. These options range from $477 per contract to $525. Now, the further out you go, the more expensive they get. I also want to recommend highly against choosing extremely far out of the money options. They seem appetizing, they are cheap, but oftentimes they have much less liquidity, they don't move as well, and you'll get stuck holding options that go to zero. So if you have a massive move up or down, yes, those extremely far out of the money options will do great. But I like to play it safe. I'm in this for the long term. When I got into trading 8 years ago, I didn't get in to get rich quick. I got in to be doing this 5, 10, 15, 20 years. I wanted to make life-changing money for my family. I wanted to make life-changing strides for myself mentally. Well, that doesn't come from a gambling mindset. That doesn't come from trying to strike it big on one trade or two trades. We form a system. We trade the right way. That comes with knowing expiration dates, premiums, setups, etc. And we execute every single day. Now, for our second most important part behind technicals in our strategy, we have to look at swing trading psychology. And before I show you my strategy, here are a few of the principles that I used to build my first trading account from $5,000 to $100,000 plus, and that helped me swing trade with confidence. The same confidence that I used on my latest trade and I've used over the past few years swing trading. No larger time frame level, no trade. If we are swing trading, we are strictly looking at the weekly chart and the daily chart. Sometimes we'll peek at the hourly, but we want larger time frame confirmations before even thinking about putting on a swing trade. 2, less is more. This is especially true when swinging. Now, this reigns true across all types of trading, whether it's long-term investing, day trading, which is typically my specialty, and swing trading. The less size you use, the more you're going to be able to let your trade breathe and work the way it's supposed to. You see, especially when we're building small accounts, we have to focus on percentage. We have to focus on making our small winners into bigger winners. That does not happen when you're stressing every second of the trade. That does not happen when you're oversizing and over-leveraging and putting on far too much risk. So keep the mindset every single day when you're trading that less is more. Third, price targets and stop loss are everything. Let me repeat that. Price targets and stop losses are everything. Especially when swing trading, you have to focus on setting your price targets and letting them hit. On this last trade that I walked through with Team Bull, I stressed this during the entire duration. I said, I'm not selling until X. I'm not selling anything until X. I understand it's easy to look at a trade, see it's green, want to take profit, but that is not the right way to do things long term. Second part of this is stop loss. You have to know your stop loss before you click that buy button on the trade. You have to know where either A, the trade is no longer valid, or B, what is your monetary stop loss? What can you afford to lose, and what makes sense with your probabilities and your risk reward on the entire trade? Green is green. Number 4, no, it is not. It's very easy, especially in swing trading, to see green, to get freaked out that you don't want something to change overnight, but you have to stick to your price targets. Green is one of the worst phrases that ever entered the trading world. Because the problem is green may be green today. It might be green tomorrow. But if you're consistently having small green days where you're not following your principle and you're leaving a lot on the table, what's going to happen is eventually you're going to have a larger red day where the red just keeps growing and growing and growing and knocks out 2, 4, 6, 8, 10 green days worth of work, and that's going to set you back dramatically. So we have to get rid of the phrase, green is green, stick to our price targets, and stick to our stop losses. And now that we know that, now that we're going to go into our swing trading with the right mindset, we're ready to look at the strategy. Now it's important to remember, and you'll notice that I said that trading psychology is the second most important part. Now, I'm an outspoken critic on this issue, but I do not think that psychology is the most important part to trading. I think it's an extremely important part. It's something that I've helped over 60,000 students master, but it's not the most important part. Our strategy is, and that's what I'm going to show you now. A few important things to note before we dive into my strategy and how I find trades just like this. I don't trade patterns. I don't trade triangles. I don't trade hexagons. I don't trade triple tops, triple bottoms. I trade price action. I watch candlesticks. I watch supply and demand, and I watch volume. That is it. I have one of arguably the most simple strategies that has kept me alive for 8 years now, and that I plan on keeping me alive for the next 8 years. 2, my strategy is based on defining risk. When I entered this trade right here on June 17th, as you'll see here, I defined my risk first. I told Team Bolt, I said, I have a higher risk swing, Tesla equity and leaps. We are breaking out of larger time frame structure, and I think if we hold here, we can see 200 plus. Still holding my equity adds from before too. We've been adding Tesla down to 140. Risk here is daily, weekly close below 170. That is the first thing that I identified with this particular trade. Now, what did I see looking at that? This is the most important part, arguably, to start this. We had multiple candle touches down on the weekly time frame at 170. So we recognize that, and we see from a macro structure picture, if we are breaking out right here, which we'll go over how we identified the breakout in just a moment, we know that if we fail a breakout up and collapse below a previous support level, that we've lost our buyers. This hold right here, this uptrend is no longer valid if we break this structure. So when we enter on the 17th, right around 180, we see us breaking out of a weekly trend right here, right? We have trend part here, part here. We break out of this weekly structure right in here, okay? Now, a lot of you look at this and you say, oh, this is a bullish pennant or a bullish triangle, whatever you may call it. I don't look at that. I look at that we had an aggressive move off the lows with higher volume. We then consolidated. We made higher lows for the next 6 weeks. And when we finally broke out right around here, this could be moved a little lower here. Okay, when we finally broke out right around here, we did this on volume. Every green week was pushing up on volume. Our red was getting lower. So I look at buyers stepping in, us holding this 170 area, breaking out of a weekly structure and being able to define risk at a certain level. Now, it's also important to note that with a setup like this, typically when you see a triangle form or consolidation, we will more often than not continue in the way that we first started. So with this particular setup, we see that we had an aggressive push up and then consolidation. 9 times out of 10, I'd say, or 8 times out of 10, we will continue after the consolidation in the direction we originally started. This was with an aggressive push up, consolidate, boom, push up. Now, it's also extremely important to respect and understand trend. We look back on this particular setup and we've been on a downtrend. We had a swing high here, lower high, lower high, lower high. One more lower high here. But then it kind of stopped. Okay, we stopped having as aggressive of selling, consolidation, little sell, consolidation, and then the aggressive push up. This is where things change a little bit. You notice our structure changing. The bears are getting weaker. And now obviously there's the part where you have to look at fundamentals. I get it. But from a technical standpoint, if I can find a trade where we have, a strong push up on volume, I can define my risk, I can put my contracts a month and a half out, that's what I'm going to look for. The same philosophies can apply with trading the S&P 500, the NASDAQ, or any other individual names. It's really all about being able to identify these key breakout spots and, more importantly, where you can define your risk. Now, you could have arguably put on this trade a little earlier too, even down here. Put your contracts out a month or two, right? Or just add equity and hold until you have a weekly close below a certain level or a daily close below a certain level. Same risk reward would have applied. Now, part of the reason why, as you guys grow your accounts, obviously you are all here to eventually grow to having a larger account. And if that is you, and if you've gotten some value from this video so far, make sure you tap in, hit the subscribe button and slam that like. Then the same principles all apply. We manage our risk, we define our risk, we let our trade breathe. Now, it's important to note too that on a trade like this, even with this a massive breakout that ended up going over 1,000% for some of our members in Team Bolt, ended up going 600% where I took my final profit. I left some options on the table. I'm still holding a lot of that equity from this swing. I've had 2 trims so far, which of course I document for my team. It's important to note that we don't get greedy. We follow our plans. And another part I wanted to tap in on was that with this particular trade, I was emphasizing weekly that I was not selling anything until 200 plus. Yes, we were up decent around these like 190s, whatever, 195. But when we're setting price targets on swings, it is critical, guys, it is critical that we don't sell early. If you're putting on 30, 50% risk on a swing, which is pretty common, you want that closer to 80, 100% profit. You have to have those larger winners when you're putting on a larger percentage of risk. That is critical for you guys as traders. Now, before we hop off, I want to go over something quick on SPY too. A lot of what I teach is based on SPY, ES, NQ, and QQQ, because that's what I've made a majority of my money trading the last few years, along with Tesla and several other individual names. When we are trading SPY, the exact same thing applies. Now, I'm personally typically not a breakout trader. This Tesla was too good not to trade. The risk reward was too good. However, typically, I like to take trades on higher lows or lower highs. What I teach in my strategies work both ways. They work on uptrends, they work on downtrends. So for example, if you were trading SPY in here, this is a trade that I believe Grizzly took inside Team Bull as well. We break out of this 460, right? This resistance here. We have an impulse candle to the upside, and we retest back down. Now, if you are to take this trade, I don't care what your entry is. I don't care what your entry is. Say you get a perfect entry at 466. What I care about is that you manage your risk and define your risk to our previous resistance turn support. So in this trade, your risk would be you add at this higher low, and your risk is a move to 460 or below, a weekly close below 460. I'm typically looking at weekly closes and sometimes daily closes for swing trades, which means on this trade, if you have 6 to 8 points of risk, you need 12 to 14, up to 16 points worth of potential gain. That's how risk reward works, all right? We want 2R to 3R minimum. If we're risking 30%, we want 60 to 90% profit. If we're risking 50%, we want 80 to 100 to 150% profit. And the best thing you can do is after you've taken that first initial trim is let the rest run, set your stop loss to break even, and try to milk your winners as much as possible. That's what makes Team Bull what it is. We emphasize bigger winners and smaller losers. We teach our students, I teach you every single day on this YouTube channel, the right way to trade. The right way to still have losing trades and be a winning trader. That is the key. We have to be able to accept being a loser, being a damn good loser, and making progress with the winning side of our trading journey. That's what Team Bull stands for. That's what I'm trying to teach you guys. I hope you guys got some value from this video. Again, make sure you tap in, hit that subscribe button, and let me know in the comments what you want to see next. I'm trying to make the rest of 2024 and all of 2025 and beyond the best education possible, whether it be futures, individual stocks, indices, you name it, we got it for you. Trade smart, trade safe, and I'll see you in the next video.